Good morning and welcome to TOITOI Japan Market Radio, April 3, 2026. I'm coming to you from Tokyo with today's briefing for global investors tracking Japanese markets. Joining me is our portfolio manager who focuses on Japan macro strategy. Let's start with where we closed today.
Thanks for having me. We saw a broad-based rally across Japanese equities today. The Nikkei 225 finished up 1.258% at 53,123.488, while the TOPIX gained 0.94% to close at 386.6. The Mothers Index, which tracks growth and tech-oriented names, rose 0.595% to 2,367.0, and the J-REIT Index climbed 0.841% to 1917.5. On the currency side, dollar-yen moved higher by 0.577% to 159.603, reflecting some risk on sentiment. Commodities were also notable, with gold and yen terms up 0.779% at 17475.0, and crude oil surging 11.406% to 111.54.
That's quite a strong session, especially with the Nikkei leading the way. Now, the backdrop here is important because overnight we saw Wall Street stage a pretty solid rebound. Several headlines this morning are connecting the dots between that US strength and today's performance in Tokyo and across Asia. Can you walk us through what's driving this correlation?
Absolutely. US equities rebounded meaningfully overnight, and that's providing a clear tailwind for Asian markets at the open, Japan included. This matters because Japanese equities are highly sensitive to US market direction. We have significant cross-border capital flows, and Japanese institutional investors hold large exposures to US assets. When Wall Street recovers, it improves global risk sentiment, and that typically supports Japanese equities while reducing safe haven demand for the yen.
So it's really about that risk-on, risk-off dynamic flowing through to Tokyo. What does that mean concretely for the different asset classes here in Japan?
For equities, the Nikkei and TOPIX are likely to benefit from this momentum. Risk-on sentiment usually favors cyclical sectors and exporters, which are heavily weighted in both indices. On the yen side, improved risk appetite tends to weaken the currency modestly as safe haven demand falls. That's actually supportive for exporters but does create some pressure on import-dependent companies. As for JGB yields, we could see some upward pressure if this positive sentiment extends to longer-dated bonds and reduces defensive positioning. That said, the magnitude really depends on any signals from the Bank of Japan and domestic policy factors.
It's worth noting that this is more of a macro sentiment story than something Japan-specific, correct?
Exactly. The actual impact will depend on the magnitude of the US rebound and whether we get any policy announcements from the BOJ or the Ministry of Finance. But the initial read is constructive for Japanese risk assets.
Staying with that theme, Bloomberg reported this morning that Asian equities may open higher after the US rebound. This is really reinforcing what we're seeing in today's session. How should global investors interpret this kind of follow-through?
It's a sign that the correlation between US and Asian markets remains very strong. Japan's equity markets are particularly sensitive to US performance and broader risk sentiment. A US rebound typically lifts demand for higher-yielding Asian assets and reduces safe haven flows. Additionally, an improved US economic outlook could influence Federal Reserve policy expectations, and that has direct implications for yen-carried trades and cross-currency dynamics.
Let's break that down sector by sector. Which parts of the Japanese market are likely to benefit most from this environment?
Export-oriented sectors like technology, autos, and industrials typically benefit the most from risk on sentiment. We'd expect cyclical stocks to outperform defensives in this kind of setup. The weaker yen we're seeing today also helps these exporters on the margin. On the flip side, if risk appetite continues to improve, we might see some rotation out of defensive fixed income into equities, which could push longer-dated JGB yields higher. But again, the Bank of Japan's policy stance remains the primary driver there.
And on the currency side, you mentioned carry trades. Can you explain how that works in this context?
Sure. In a risk-on environment, investors are more willing to borrow in low-yielding currencies like the yen to invest in higher-yielding assets elsewhere. That puts downward pressure on the yen. Conversely, when risk sentiment deteriorates, those carried trades get unwound and the yen strengthens as a safe haven. Today's move in dollar-yen toward 159.603 reflects that dynamic. If US outperformance persists, we could see dollar-yen strengthen further.
Now, another angle to this story is the Nikkei specifically leading gains among Asian indices today. Reports noted that the Nikkei and South Korea's Kospi were out in front. What does that tell you about investor confidence in Japan relative to the region?
It suggests relative investor confidence in Japanese equities. The Nikkei's outperformance versus other Asian indices indicates that investors see Japan as a beneficiary of this risk-on move, not just a passive participant. Japanese exporters and multinationals derive significant revenue from overseas, so Wall Street recovery signals improved global demand and corporate earnings expectations. That's particularly supportive for large-cap names in the Nikkei.
So this isn't just about sentiment, it's about fundamentals as well.
Correct. When U.S. markets recover, it reflects expectations for stronger global growth and corporate profitability. Japanese companies, especially in industrials and materials, are leveraged to that. A stronger dollar environment also supports their competitiveness, though it does limit further yen appreciation. All of these factors combined make this a constructive near-term signal for Japanese equities.
Shifting back to yields for a moment, you mentioned potential upward pressure on JGBs. How much of that is driven by global factors versus domestic policy?
Domestic policy is still the primary driver. The Bank of Japan's yield curve control and any forward guidance on policy normalization will have the biggest impact on JGB yields. But global risk appetite does play a supporting role. If investors rotate out of safe haven bonds into equities, that can push yields modestly higher. We'd need to see sustained improvement in risk sentiment for that to have a meaningful effect, though.
And just to connect this back to the commodity moves we saw today, crude oil up over 11% is quite striking. How does that factor into the Japan story?
It's a double-edged sword for Japan. Higher oil prices increase input costs for Japanese companies, particularly in manufacturing and transportation. That can weigh on profit margins. On the other hand, the move in oil is often correlated with stronger global growth expectations, which benefits Japanese exporters. The net effect depends on how persistent the oil rally is and whether it's driven by supply constraints or demand recovery. For now, the equity market is focusing more on the positive growth signal.
So as we wrap up today's session, what are the key takeaways for global investors watching Japan?
First, the U.S. rebound is providing clear support for Japanese equities, particularly exporters and cyclicals. Second, the yen is under modest pressure as risk appetite improves, which is supportive for exporters but something to watch on the import side. Third, JGB yields could face some upward pressure if this risk on sentiment persists, but domestic policy remains the dominant factor. Overall, this is a constructive near-term environment for Japanese risk assets, but investors should keep an eye on any shifts in Fed policy or BOJ guidance.
And the broader context here is that Japan remains highly correlated with global risk sentiment and U.S. market performance.
Exactly. That correlation is a feature, not a bug, of investing in Japan. It means that global macro developments, particularly out of the US, will continue to drive short-term moves in Japanese markets. For investors with Japan exposure, it's important to monitor both domestic policy and global risk dynamics.
Well, that's a comprehensive look at today's session and the forces behind it. If you're a global investor following Japan's markets, we hope this briefing was useful. Consider subscribing if you want to stay on top of daily developments in Tokyo. Thanks for joining us, and we'll see you next time on TOITOI Japan Market Radio.
Thanks for having me.